Michael Burry crying on Tesla short. While Elon Musk spent his day dispatching tweets on Twitter, the Tesla founder was unaware that he has become the prey of a different kind of financial heavy hitter on social media. The Big Short fame Michael Burry exited bearish bets on a few stocks, which include Alphabet Inc.'s Google and Elon Musk's EV maker Tesla. But why does the big Tesla bull ditch his bet against the electric automaker stock? And is it the wrong move that Michael is crying over? Well, stay tuned till the video to find out. Welcome to Tesla Stock News. Don't forget to subscribe to our channel and press the bell icon to never miss an update on the ups and downs of the stock prices of Tesla or anything related to the multi-talented influential tech icon and billionaire Elon Musk. Born in California, Burry is an American investor, physician, and hedge fund manager. Currently, he manages Scion Asset Management, which he founded in 2013. Scion Asset Management mainly invests in services, technology, finance, and consumer goods sector as of Q2. He has invested in many companies, but a few months back, the Tesla bull and Big Short inspiration, Michael Burry, ditched his bet against the electric automaker stock. In an emailed statement to CNBC, Burry revealed he is no longer betting against Tesla's stock price. He also stated that media reports had inflated and exaggerated the situation. But what made Michael Burry exit the Tesla stock? Michael Burry, the celebrity investor, is the one who rose to fame by being one of the first to profit from the subprime mortgage crisis in the 2000s. Michael Burry's bets against mortgage securities in the run-up to the 2008 financial crisis were featured in Michael Lewis's 2010 book, The Big Short. Burry now operates a $683 million Scion Asset Management. Now, the news is that Scion Asset Management, which Burry established and runs as chief executive officer, had cut back to only a handful of roles as of the end of September, according to a regulatory filing. Among trades that the firm shut down in the third quarter were bets against Cathie Wood's flagship ARK Innovation ETF and also Elon Musk's Tesla Inc. Why does he do that? Let's try to figure it out. So Burry surfaced on Twitter to condemn Musk for seeking attention solely to sell his company's stock, and then Burry exited out of options on slightly more than 1 million shares of Tesla, showing a snapshot of his portfolio as of September 30. Among other positions he exited were put options on 91,900 shares of Alphabet Inc. and 1.9 million shares of the iShares 20-year plus Treasury ETF. Burry also exited a put position on 235,000 shares of ARK Innovation, the ETF run by star stock picker Cathie Wood, which was the top-performing U.S. equity fund last year, thanks to its bets on high-growth companies that rallied during the early stages of the pandemic. Burry is not a rookie in the stock market. He wields a strong portfolio, but Scion Capital's recent 13F filings contained a startling revelation. The fund is short hundreds of millions of dollars worth of Tesla stock via put options. Scion's founder Michael Burry has denounced Tesla in the past, but now he appears to be upping the ante and betting a significant portion of his fund on Tesla shares are now seem to be tumbling. Burry was vocally bearish against Tesla stock. Referring to his past expertise in comprehending bubble stocks that were set for a huge downfall, Burry believed that Tesla was the next company to undergo a substantial devaluation. Burry regularly tweeted negative opinions about Tesla stock only to delete and then deactivate his account shortly after. Burry's overview of Tesla stock included claims that the company's Bitcoin investment was a distraction from quality issues and that investors should enjoy it while it lasts. In May, Burry's firm Scion Asset Management had attributed 800,100 put options on Tesla shares as of the end of Q1, according to a regulatory filing with the SEC. The specifics of the put options containing their value and other deals were not accessible. However, Tesla stock closed at $667.93 at the end of Q1, giving Burry's share value an estimated worth of $534 million. However, Burry's analysis of Tesla stock was apparently flawed. Tesla stock has climbed over 11% in the past year. The company has withstood a 700% increase in their stock price in 2020 and has continued to climb up to its previous levels, although not at an accelerated rate like last year. In a now-deleted tweet of frequent habit of Burry's, the investor wrote, "Let's face it, Elon Musk borrowed against 88.3 million shares, sold all his mansions, moved to Texas, and is asking Bernie Sanders whether he should sell more stock. He doesn't need cash. He just wants to sell Tesla." Musk then ditched Sanders, answering to the Vermont senator's tweet demanding that the extremely wealthy pay more in taxes. "I keep forgetting that you're still alive," Musk wrote, along with "Bernie is a taker, not a maker." Burry, however, has had Musk in his senses before his recent war of words. He admonished the billionaire for his statements about competitor Rivian, in which Musk said the company's true test would be achieving high production and breaking even on cash flow. "No, Elon, the true test is achieving that without massive government and electricity subsidies on the back of taxpayers who don't own your cars," Burry replied. The media had a field day reporting on Michael Burry's, which reported $500 million short position of Tesla. The media breathlessly reported this number, with many claiming that Burry's $1 billion plus hedge fund had roughly 40% of its money tied up in a Tesla short. Shorting treasuries is a typically negative carry trade, meaning you are betting that the cash will transcend the treasuries, which pay about 2.3% per year for TLT. For Burry to make money, TLT needs to fall 2.3% or greater per year based on the extent of TLT. It means that results need to rise about 13 basis points per year for his trade to make money. Another way of putting this is that if treasury yields stay the same for a year, TLT owners make a 2.3% return. Burry again seems to have a strong opinion on treasuries continuing to fall in price to be willing to make this trade, and with options no less. Now, why do you say this would go against Burry? Well, the report is that short interest in Tesla stock has actually fallen off quite heavily compared to previous levels. Tesla has long been one of the most heavily shorted stocks in Wall Street. However, a recent analysis from IHS Markit Limited showed that short sellers are a rare breed. Just 1.1% of available Tesla shares are borrowed by trades, which is a standard measure of short interest. This was a record low according to the IHS analysis. Short interest had fallen to $31.4 million in December, as just 11 months earlier in January 2020. It was at its peak of $93.6 million. The timing of Burry's trade is intriguing because he could have made the same statement any time in the second half of last year that Tesla's business can't support the stock price in the long run. Burry must see a fundamental or technical catalyst for Tesla stock to continue falling to have bet hundreds of millions of dollars against the stock. Scion is leveraging the trade with put options, increasing the potential for gain or loss relative to the capital invested. It was not clear how Burry's bearish bets on Tesla and the others fared, given that regulatory filings do not require the disclosure of option strikes, purchase prices, and expiration dates. Tesla bears are abrupt to shoot claims of fraudulent behavior, a busted growth story, or an imminent collapse of the automaker stock. However, arrogance has been the fall of several brilliant men. Bears that have undergone high magnitude losses due to their bet against Tesla have pulled out their positions, while some admitting defeat and tipping their caps to Tesla and CEO Elon Musk. But it's unclear how successful the wagers were because full details of the bearish put options used by the firm were never released. Burry told CNBC that he had closed his Tesla wager. Burry let out an emailed statement that his position was not as severe as media reports claimed. "No, it was a trade," he said. "Media really inflated the value of these things. I was never short tens or hundreds of millions of any of these things through options, as was reported." The options bets were extremely asymmetric as the media was off by the orders of magnitude. But we can never know what is reality. Anyways, what do you think about this situation? Let us know in the comments below. And most importantly, if you want to be updated on every single topic related to Tesla's stock market, then you should consider subscribing to the channel and pressing the bell icon. See you in the next one. Until then, peace out.